Mario from Trade of the Day. Today, what I'm going to cover, I'm going to go over what are we looking for in terms of traders and investors in the market. What news announcements are we waiting for to see where the market's going to head next? So that's what I'm going to talk about. Because there are some news announcements, very very important. They're coming up. They are definitely going to make they're going to make the markets move. So I want to cover those and what to expect. So I want to quickly go over the market. Very very important. So again, I have a 1 year chart, daily chart of the S&P 500 using SPY Spiders ETF. So again, as you guys can see, the last year has been trending very nicely. January had this very very strong uptrend, but then followed by this huge sell-off that happened after the jobs report that occurred on Friday, February 2nd. So that's the reason why this Friday, which will be Friday, March, let me look at the calendar just to make sure, Friday, March 9th, which is this month's jobs report, is very, very important. Now, as I talked in prior videos, the jobs report is every single Friday, the first Friday of the month, every single month. So again, since we know that last month in February, February 2nd, the jobs report was the main driver of this sell-off, we're going to see how this jobs report this Friday, March 9th, really makes the market move in a certain way. So far, we've seen continuation in the market. So we saw this huge sell-off, high volatility in the VIX, and then we saw a bounce. We did see a sell-off after Cohen resigned. Actually, that was yesterday, and but it was very, very small, and it bounced. Now, actually, we did see a sell-off after the Federal Reserve speech last week, and after Donald Trump, the President of the United States, was talking about the tariffs. So we saw these sell-off, but there's this 266 level held. When we saw bounce, we saw continuation. So there is a good chance that this level is going to hold the next leg up, or the next move up, or the next trend. As long as the jobs report on Friday is normal, or nothing above expectation, or it's about expectation, because the market is expecting a certain number. So as long as it's not too far off, or something unexpected happens in Friday's job report, we're going to be fine. So just so you know, what I'm seeing in the market, again, like I said, I am seeing continuation across the board. And just to kind of start off by the FANGs, which are Facebook, Amazon, Apple, and Google, Netflix and Google, those are the stocks that are leading the market. So I want to go over those really quickly so you guys can see Facebook in the last 6 months is trending very nicely. There's continuation, so that's very very nice. I really like that. Let's look at Amazon. Amazon is trading all-time highs. Wasn't even affected that much by the announcement of the trade war, which is very very important. So there's definitely a lot of strength in Amazon. Now let's look at Apple. Apple, again, not that much change. Again, it wasn't really affected regarding that trade war. So and it's trading up to highs, and definitely it could be a push to break this 180 level. Now let's look at Netflix. Netflix is breaking out, so showing a lot of strength. So definitely that's helping and lead the market. So there's definitely relative strength right there. And then look at Google. Again, Google showing really nice strength, really nice continuation. So far, I'm looking at these stocks, the market looks pretty good. Now let's look at the sectors. See what the sectors are telling us. The S&P 500 sectors. See what was showing strength. So right now we see biotech showing some strength, which is nice. So let me put a 1 year chart, and this is a very nice trend in biotech. So I like that. So let's look at technology, which is pretty much the Nasdaq. Again, showing strength, nice continuation. This is healthcare, showing some continuation right there. It's definitely showing some strength too. Now let's look at real estate. Now real estate is actually in a downtrend. Now this is because when interest rates go up, real estate REITs, real estate investment trusts, go down. So it's kind of like an inverse, because a lot of these investments have very they move with interest because they have like this fixed interest rate yield that pays out. So they're sensitive to interest rates. So let's look at industrials. Industrials, yeah, showing some strength. Definitely showing some strength. I'm gonna put the. I think I'm gonna put the 6-month chart. Yeah, much better. Let's look at financials. Again, showing strength. Materials, showing some strength. Consumer discretionary, showing some strength too. Utilities, again, similar to real estate investments trust. Um, they do move inverse to interest rate now because the Federal Reserve is increasing interest rates. That's something you're going to see in these sectors. Now let's look at energy. See what's going on with energy. Energy is definitely very, very weak. So right now the weakest sectors that I see are um, REITs or real estate investment trusts, utilities, and energy. So I was expecting, which is very weird because oil keeps moving up. Just to kind of show you a chart of oil, keeps moving up, trending up, but energy is not following that trend, which is very weird. That's very peculiar, and I noticed that, so I just wanted to mention that because it's very, very important. So now let's look at staples, consumer staples, another sector that is kind of like lagging. So and again, this sector is kind of the reason why this sector is also lagging with real estate, um, utilities, energy. That's has to do with something else, and consumer staples because they're sensitive to interest rates. So when interest rates go up, these sectors tend to go down. Now the reason why is because consumer staples are very, very conservative investments, and those companies usually give a very fixed dividend yield return for investors. So when dividends go up, when interest rates go up, there's almost like a competition between bonds and these stock investments because you know if interest rates go up, investors could just also buy the 10-year bond or the 30-year bond to make a similar return, which is less riskier than maybe consumer discretionary. So, consumer staples. So that's pretty much it, guys. So far, I do like biotech moving very nicely. Technology, healthcare, industrials, financials, materials, and consumer discretion are definitely leading the market. And we have the FANGs, which I covered earlier, are definitely also pushing the market up. So I think there's definitely going to be some continuation as long as there's nothing crazy happening on Friday. Now, just so you guys know, what I look for when I look at the Bloomberg economic calendar to kind of let me know what's coming up in terms of news announcement, they could affect the whole stock market. So actually tomorrow, Thursday, we have jobless claims at 8:30 a.m. Eastern Time. That's actually very, very important as well. It kind of just shows how many unemployed were claimed, or how many people applied for unemployment insurance. So if it was less than expected, it could be good. Now, again, keep in mind that these numbers, a lot of these numbers are what the stock market expects versus what really happens. So if the jobless claims are what the market expects, we shouldn't see no problem in terms of the stock market overall. Same thing when Friday, when the jobs report, the employment situation is reported at 8:30 a.m. Eastern Time. As long as there's not something above expectation, something that is off that investors were not expecting, I think we should see a nice move continuation in the stock market. But we'll see. Again, we cannot predict the future. Cannot predict those numbers. We just gotta wait till Friday. We'll see what the numbers are, and we'll definitely see. But so far, everything looks good. I like how the market is trending. I like the FANGs. The stocks are leading the whole market as a whole are looking really strong, and I like the sectors like industrials, financials, materials, consumer discretionary are definitely leading the market, and also biotech are moving the market very nicely with healthcare as well. So far so good. Hopefully you guys learned something from this video, guys. If you have any questions, feel free to make comments. You guys are welcome to subscribe to my channel. You guys will see at the end of this video the subscription button around here, and you guys are welcome to watch any of my other videos. Have a good one, guys. Take care.